Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. A little bit of a nervous start this week on the back of some pretty strong data out of the US again on the employment side. Non-farm payrolls were up about 20,000 more than expected. That still gives us sort of a 3-month average of about 180,000 jobs created per month, and still looking around that for a sort of yearly average as well. So what that does is just sort of negate the very weak numbers in February that was only up around sort of plus 20,000. That was revised slightly up to around 30,000. But I'd say, certainly the stronger data for March still implies that the US economy is chugging along at a pretty good rate. Now, obviously, just going to be interesting to see what it does to sort of the Fed's thinking. Certainly after the sort of weaker data in February, the sort of Fed had come out and says, potentially rates are now on hold to at least June, and maybe even some analysts were predicting that the Fed wouldn't have to raise interest rates again this year. This has further sort of stoked the argument as well from the president. Trump has come out and sort of hit in the headlines saying, the only thing that's really holding back the US economy now is the Fed. They should stop raising interest rates, and even sort of talking about potentially cutting interest rates. Now, whether that's possibly just trying to deflect a little bit of the heat that President Trump is suffering as well on this, never-ending sort of border wall discussion. As he seems to raise the stakes even further now, talking about potentially closing the US-Mexico border. Now, that is one of the busiest border crossings in the world, and also as well, a lot of trade comes through there as well in terms of goods coming into the US, but also being exported from the US as well. Really would be pretty disastrous for the US economy. And that's been further backed up by members of Congress, pretty senior members in the Republican Party coming out and saying, look, if you're looking at closing the border, that really is pretty disastrous. The problem is, the major issue is that, Trump is, hell-bent on building this wall, and he's just not getting the support from the Republican Party, and obviously not getting much support from the Democrats either. Now, maybe you have to ask the question, is that possibly because it's a bad idea? Trump is also stirring the pot as well with Europe, talking about tariffs on European goods. And again, that's just sort of stirring the pot and, just trying to provoke a little bit of a response. Still no news on the China-US trade talks, but we're led to believe that is very, very close now. Oil's traded up pretty aggressively. WTI's up sort of 64 bucks and change. Brent is above $70. And again, just going to be interesting to see the rhetoric that comes out from President Trump as well. He's been highly critical of sort of high oil prices. But again, sort of failing to take into consideration that the US is now a net exporter of oil. The Brexit debacle continues to sort of trundle on. Prime Minister May is sort of trying to get a further extension to around June, talking with European officials, and obviously trying to sort of persuade the sort of heavyweights, if you like, Germany and France, to push out that extension. But again, the biggest issue seems to be that the UK Parliament can't agree on what deal to put forward. Here in New Zealand, investors are still trying to digest the sort of latest comments from the Reserve Bank, sort of reintroducing the possibility of an interest rate cut. Say that would sort of have pretty major impact, obviously, on savings rates, term deposit rates, and also bonds. Now, on the back of that, Heartland have a fixed interest offering in the marketplace, 5 years, 3.5% minimum rate. If you're interested in that, call us on 0800 867 323. As we head into the end of KiwiSaver sort of year end, 30th of June, it's a good time to check those balances to make sure you have contributed enough to get that maximum tax credit. So if you're unsure on what those numbers are, or what needs to be put in, call us on 0800 867 323. But as always, there are plenty of options out there and alternatives out there for income. And if you're looking at discussing what alternatives are available, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.